Good morning, traders and investors. Merry Christmas Eve, and welcome to Benzinga's pre-market trading show. My name is Kyle Bazzi. Along with me is co-host Dennis Dick. How's it going this morning, Dennis?
Not too bad, Kyle. It looks like it's going to be a very quiet day here, though. Only a 4-point range here overnight. So this is typical for
Oh,
your
not so
Christmas
bad.
Eve trading, shortened trading day.
I'm filling in for Mr. Joel Conan. Maybe we'll make this a regular thing. Joel, if you're listening, sorry, buddy, you just got voted off the island.
Boom.
We're,
Weakest link.
we're here
Goodbye.
with Mighty Joe Young, editor at Benzinga, and Mr. Brent Slava.
Good morning.
Guten Tag.
Thanks, Cal.
All right, guys. Well, let's jump into this nice and slow day. Dennis, I heard we're coming out with the big guns this morning and talk a little about the economy. You got some all-time highs yesterday, especially in some of the bigger name stocks, and
Yeah,
lower retail sales this morning.
the Momos continue to go, and we saw it yesterday with Facebook. It was sneaking out, and we were saying how it was breaking out to a new high on the pre-market show. It did not slow down. Facebook just took off. 57.77 is where it closed. So opened the day down at 55, right near the lows actually, right around 55.45. Never really looked back here. Open at 55.50, low was 55.45, and just ran straight up $2. Everybody wants to own these stocks. I guess you're getting towards the end of the year, and if any portfolio managers don't have these in their portfolio, they want to be putting them in there now. Maybe they're banking on the Santa Claus rally coming in the next 5 days. I don't know what it is, but wow, that was an incredible move for Facebook and Twitter yesterday.
They ripped right. I mean, we were talking about them on the show yesterday,
Yeah.
and they, were settling right around, and just right after the open, completely ripped. I mean, after we got off the show, I was talking with Brent, sitting here watching these things up a couple of handles, and they didn't stop until,
No.
midway 1 o'clock during the day.
It was just an incredible move there. And Twitter, too, like you can look at this thing, and it was just hanging out there for a day or two around 60. And then yesterday decided I'm done with 60 and straight to
Ripped
65.
to
It got to 64.99.
65. Wow, what a
Another
move.
5 point move straight up for Twitter. This thing has so much gas going right now. That's why you just cannot short stocks like this. They've just got so much momentum. I don't care what valuation methods you're using. This thing has all the momentum here. Obviously, it's going to pull back here eventually, but who knows when? So when you're trying to stop stocks and when they're breaking out to new 52-week highs, it's just a really bad idea to be playing them from the short
I was
side.
gonna say you
It's
can't
up
be
here
shorting those,
again.
right?
What's that,
You
Brent?
can't be shorting those, right?
It's real hard to do. I mean, it may be intraday for little scalps or something, but you're on the wrong side of the trade. The thing's been straight up here for the whole entire month of December. Started the month down at $40, is now at 65. So what's that? Up a cool
65.
60%. You're
Wow.
fighting the tape. You're fighting the tape. So eventually, this will have a pullback. There's no doubt about it. I mean, stocks don't go up 60% without pulling back eventually, but who knows? It could go up another 10 points before it starts pulling back. So it's just, the stock's never been up here before. There's no pain. Anybody that is short is screaming in pain right now.
Mm-hmm.
So it's really, really difficult to short these things. And here you are again. It's up another 70 cents here this morning. Market's down a point. It doesn't care. It's up there. Twitter don't care. It's just going higher.
MC Hammer
Wow.
said it best. Can't touch this.
Yeah, it's unbelievable. And Facebook too, like both these stocks, you look at them from a valuation perspective, yeah, it doesn't make sense to me either. But we know what can happen. Stocks can go up for a long, long time and not make sense. And if they're all on growth and I expected growth, and we don't really know what that growth is here yet. Like I said, I don't love the way Facebook is going with a lot of their ads sticking in everybody's face anymore. But I keep saying that short-term gain for long-term pain, and we're still in that short-term gain period right now for that. It's immediately hitting the bottom line when they're adding, new sources or new ways to obviously generate ad revenue on their platform. So I just don't see what's going to turn this around anytime soon. Maybe it comes January, maybe this thing starts to pull back here. But right now, all the momentum is to the upside on these stocks.
Facebook needs a significant number out there that if they want this to go to the downside, that's going to be showing users leaving. I mean, that's how you crush Facebook, right? Because with a billion users, I mean, you can monetize a billion users, and,
Yeah.
and until they start seeing a significant decrease in active users per month, they're going to keep going up.
It's scary too, like when you say they got a billion users and you're trying to short that thing. I
Mm-hmm.
mean, if they figure out other ways to monetize that, like what do they make? Like I forget what they used to say, like it was like wasn't it like $1 per user
Per
or
user or
something?
something per quarter.
Yeah.
or
So I
something like
mean,
that.
but if they could ever figure out a way to maybe monetize that more,
Hmm.
a billion users is still incredible. That's incredible. So, and the stock has just been
And
incredible too.
they just started monetizing Instagram. So I just started my girlfriend just started telling me about ads that she's starting to see on Instagram too. So they start monetizing that as well. I mean, they're just going to keep acquiring and what's the next acquisition target for Facebook is my question.
Yeah. But that being said, now you're chasing it for sure. I like it when they first start breaking out. And obviously, we had a little bit of consolidation for 2 or 3 days, which gave you a setup for the long. And obviously, yesterday on the show, and we're looking at those things starting to break out there again, that was your clue. Now, if you're chasing Twitter here, you're really chasing it because it just broke out from 60 and went to 65. I mean, it went up almost 8% yesterday here on no news. So you are chasing it here. So these are two stocks that honestly, I would just avoid right now. They're going to trade like casino stocks, man. And like, I mean, and I mean that by go to the casino and bet on red or black.
Hmm.
It's very difficult to call, these stocks minute to minute, let alone day to day here. And
What
they
a-
can go anywhere.
what
There's
about
just,
an iron condor and something like this?
it's so hard to pay anything from the options perspective though, just because the premiums are so
So
much on
high.
everything too. So I mean, I guess if you're going to play and you can write, if you're looking at like a spread trade and you can buy an out of the money option and sell one a little bit higher, trying to get the premium down here. But when you're looking, at these things, the premium on these things, I don't even have to look at it. You can just tell you right now, it's high premium you're going to pay from any options play on any of these things. So they're tricky. I mean, for me as a professional trader, I approach the market entirely different. I don't ever look at stocks like something like this that I can't really predict that well. Yesterday, yeah, it was breaking out to a new high, so I could have taken a trade on it. But today, now I have 5 points of air below me when I'm looking at this thing
Hmm.
because really, it just broke out from 60. So if you're playing the bullish thesis holds as long as this thing's above 60, do I want to give something 5 points? No, hell no. So I can't control risk on this anymore. Yesterday I could have because I was looking, at the potential for the breakout, and I could have played it through the 60 and said, look, if this thing really starts cutting through 60 hard, I need to get out, maybe give it a half a buck or a buck. You got to give Twitter a little bit of room because it's going to bounce around. But it's really hard to control the risk on both of these stocks, at least today, because they broke out so hard yesterday. There's nothing above you, but there's really nothing below you either.
Too much
And
risk.
it's too much risk for me as a professional trader. If you feel like just, gambling this holiday season though, you can always trade these things. And little intraday trades can happen, little intraday setups, but make sure whatever you do is control your risk, know where your out is. That's what trading is all about. Professional traders will always look at how much money they can potentially lose and not how much money they can potentially make. It's all about risk management here. And if you're just buying Twitter, just, oh, it's going higher, and you don't have a game plan set in place, that is a recipe for disaster. You need to have a game plan, especially when you're trading something this volatile here, and say, look, well, maybe your game plan is you're a longer term swing trader. You think it's going to 80, but I would say, know where your out is at least. So if you're wrong, if you think it's going to 80 and all of a sudden it's back down to 60, well, what do I do now? And then it goes down to 55, and then you're like, well, what do I do now? Well, now I'm down too much. I have to hold it. Well, that's the hope trade. You never want to be in the hope trade. The hope trade is the no hope trade because when you are in that, you are in a world of hurt and you are in trouble. Never let a trade become an investment, and you've got to always think about how I can control the risk. On these
Never,
two stocks right now, very difficult.
never let it become an investment. You always say that. And the other thing is, then you get down and you have this mentality, the psychology of I just want to get back to even. I just want to get back to even, and
Yep.
that's a losing strategy.
That's called loss aversion is the psychology behind that. And that is literally 90% of your average investors will have
Hmm.
that. It's naturally in you. You want to get your money back. You want to
Hmm.
get your money back. That's how you get people hooked at the casino. They want to get in there. Oh, if I just, get this next pull on the slot machine, or I get this, the wheel to fall right, I'm going to get the money back and it's all going to be okay. Well, that's I called a gambling addiction here. And you don't want to have a trading addiction like a gambling addiction. You want to approach it like a business. You want to approach it like, how do I control the risk? And what I always say is I like to let my winners run a little bit farther, and I like to cut my losers short. But on this trade right now, yesterday, yeah, I could have controlled the risk a little bit on Twitter because he had a feeling that the breakout was going to go. Today, there's 5 points of air below me, and I just can't see how I can control that risk. So I'm laying off Twitter and Facebook at least for today.
Some
But
wise words, right, Kyle?
I'd say some of the wisest words. I mean, I've heard over the last couple of years, I've heard hours and hundreds of hours of education from traders and Just some really phenomenal guys, and that's Dennis. That's hitting the nail on the head. It's let your winners run and cut your losers short, because when you're in a loss, what you thought was going to happen did not happen. So without a strategy, that's how you'll kind of compound that and not put capital to work where it should be.
And professional traders, even the best on the street are wrong a lot of the time. Like I said, I think I was saying this yesterday, in our firm, if you're right 55% of the time, you're a phenomenal trader. You're doing right. But you can have traders that are right 55% of the time and lose money because they just don't know how to control
Yep.
their losers. Then they often cut their winners too short. I'm probably right even less than that. But I think I just have I always set up like a 2-to-1 risk reward ratio. I have a target in mind. I have a game plan pretty much going in before every trade. And I like to swing the bat when I have a nice setup. I don't like to swing the bat when I'm just, swinging at anything, because the market could be pitching you a bunch of balls here and you're going to strike out. So you want to swing when the ball's up the middle of the plate and you got a good shot to get at least a base hit or possibly a home run. So lots of different setups. There's lots of stocks to trade, 6,000 stocks for you out there. So you don't have to be trading just because Twitter doesn't have a good setup today. Doesn't mean, I'm not going to trade today. There's lots of other stocks to trade. But let's continue to look at some of these other stocks that are breaking out here. And Yahoo is one of them. We haven't talked about Yahoo on the show for a long time here, but it has finally taken out and closed above 40 here a couple of times. Obviously, the whole Alibaba thing is the thing that's really been pushing the stock higher here. But on this setup here, you've got a setup here where above $40, the stock looks pretty good on the chart.
Yahoo, the Marissa Mayer effect.
She's done a fabulous job here. You can't argue with her performance here, really, since she's taken over. And when would it have been that she took over? 2012?
2012. May 2012?
Somewhere, I think. Maybe it was even earlier than that. But regardless, the stock was $15 basically a year and a half ago. It's
Wow.
$40 here now. So it has just been a monster. And everybody had this one for dead, too. They basically said, Google's, putting this company out of business. Now the Alibaba thing, that's going to be really the money maker for this. I know my buddy Chris, I always talk about him, and he thinks that's, worth a lot. And he's actually long the stock heavily still. So good for him. I don't know if how far it can keep going, but just from a technical perspective here, it has had multiple tops just over the $40 area for the better part of December. But we're starting to sneak out of that $40 area. We got up to 40.80 here yesterday. We're bid at 40.92 yesterday, or this morning here. So we're up here again. I think this starts going over 41. I think you could see 42 here in a hurry. So I kind of like this one. Below 40, see, I'm always saying, where is my risk? So below 40, I would say all bets are off. But I like this from the bullish side as long as it stays above 40.
She's got a huge candle down. Was it this morning down to 40.53?
That's just a cross. And what I can explain that to you too here. So that's a FINRA cross, $40.53. Some institution just crossed a trade there. That's all that is. It's probably was crossing
and it just
yesterday.
popped right back up to 41.
Yeah, exactly.
Okay.
That candle actually is from FINRA. That's an over-the-counter trade that wasn't on the actual exchange this
Got
morning.
you.
They got to kind of eliminate that from the tape. So that's the one thing bad, when obviously, it's picking up off exchange trades. It was an 11,000 share trade that was done off exchange. It was probably just two institutions that were just crossing the trade. One wanted in, one wanted out. They did it down at 40.53.
July 16th, 2012, Mayer was appointed president and CEO of Yahoo.
And July 16th, so let's go and look at the
Effective
charts here,
the
back
following
to 2012. So July 16th, and here we are. Basically, the stock bottomed just 1 month later in August, down in the whole 14.59 area, and it has been straight up since. I mean, really, when you talk about all these performers and how many stocks, everybody talks about the Facebooks and the Twitters, but holy cow, Yahoo, man, Marissa, you almost got to vote her in that whole CEO of the year running here, because
no
wow,
doubt.
she's turned this company around,
No doubt.
and it is just unbelievable, the move in Yahoo here.
Wow, look at that. Just so, what do you got the price in July?
Oh, I just want to point out Marissa Mayer was appointed CEO on July 16th, 2012.
Yes, Joseph, you must have not been listening to my commentary.
You said May.
I said just said July.
I said July. I think you said July.
Yeah.
Joe.
I heard May, that's why I looked it up.
We got, what price do you got, Dennis? Yeah, right around that 15 level, right?
Yeah, 14.59, like a low just the next month there, and then it's been straight up ever since. So here's a stock that has quietly increased. It's tripled. It's basically tripled since she's taken over the company.
Since then, it's had 5 down months. since July of 2012.
And they
it's hit
weren't
5
even
down
big
months.
down months. They were just like
No.
little pauses because
Nope.
nothing goes straight up. So it's like runs up for 3-4 months, takes a breather, runs up for 3-4
That's it.
months, takes a little breather, starts running up for 3-4 months, takes a breather. Now we've been on a run here again. It looks like in the last couple of months from that chart here. But still, I mean, this thing looks like it wants to go here again. You think the Santa Claus rallies happen in the next 5 days, and I believe the statistics are like 80% of the time, the 5 days right after Christmas, we are up. So, I mean, traders always live in the percentages. We don't live in the absolutes. So obviously, this could be the year that we are down. But I mean, if you're looking at it just from a statistical probability perspective, the market is in all likelihood likely to close strong for the next 5 days or to be up again. And stocks like Yahoo and stocks making new 52-week highs, they've been your leaders all year. Why won't they be your leaders here in the last 5 days? So consider that too. But again, have your contingency plan in place. I think below $40, I think Yahoo is a little bit concerning from the long side, but right now it looks pretty good.
That's the key is to play the probabilities, but to always have an exit plan, right?
Exactly. I always know where my out is. Usually I have it defined in my head, and I don't like to put stops out there. I'm really not a fan of sitting the physical stop out there because when it gets close, they'll run it. I mean, the high frequency traders can control the price in the day. And don't kid yourself. If you got to stop sitting at 40, if the price is sitting at 40, a lot of times they'll take it through 40. It'll go down like 39.92 just to get your stop out, and then it'll take off from there. So when I say 40, it's kind of like a soft number. You got to give it maybe a little bit through 40, just because other people, it's such a common place to put a stop that maybe you want to give it like 39.70. Maybe you want to give it a little bit lower, but it starts playing like 39.50. Then it's like really through 40. So you got to give it a little bit of, space there through where you think your soft number is, but don't let it start getting down to 39 and saying, oh, well, now I've got to hold it. So never let that happen to you.
Dennis, you say you're not putting an actual physical stop on, so you actually your intraday trades,
Mental.
you sitting there with okay.
Yeah, mental stops more than anything. Or I've got software that can put stops on outside the book so that nobody can see it. But
Yeah.
that's, tools that probably aren't available to the typical retail guy. But, with Bright there, we've got different spreadsheets and stuff where I can actually monitor off. So, like if I was to place a stop order on the exchange, that order is sitting out there,
Yeah.
which is probably visible to at least, the designated market maker on the floor and possibly some other participants as well. I don't really know who, I don't know if they disclose who that's visible to it or who's buying that information. But when that's on the book there, you can be pretty sure a few people know about it, and maybe a few people you don't want to know about it. So when you keep it off the book, when you got like a spreadsheet, and if you get programmers out there, you can probably do stuff like that. I'm not a programmer, but our company just provides stuff like that.
Do you consider you consider yourself a pessimist then when you're trading in the sense that it's always good to look at what could go wrong?
It's not really pessimism. It's just a contingency plan. That's all it is. Like I'm going to the trade thinking I wouldn't take a trade if I thought I was going to lose money on it, but I'm going into a trade with a game plan. I'm going in looking, okay, I think this is what it's setting up to do. I think it's breaking out, the target or whatever you want to say, but I want to know where my out is. I want to know what's going to happen if my thesis for entering the trade is wrong. And, how do you know when you're in the wrong side of a trade too? You start losing money. So I usually like the trade to start going my way almost immediately. Just like yesterday, we were talking about some of these stocks yesterday, Kyle, that had gap down on the closing print from Friday. And there was a couple there. Just trying to go back to my sheet from yesterday. VFC, which is an interesting one, actually. If you bring this stock chart up, and I hope it's going to adjust for the split, because this actually did split yesterday. I think I had a 3 or 4 for 1 split. But anyways, this stock had run up $4, so it was like 100 or maybe it was a 3 for 1 split. I think it was like $180 stock or something, or I can't remember what the split was. But anyways, it had run up $4 into the close before the split. See if you can get the chart there from yesterday too. It's VFC, Victor Frank Charlie.
Yep, she's coming up. We're waiting for the data.
Okay, so anyways,
4 for 1 yesterday.
What was that at?
You said you had a 4 for 1 yesterday. It had a 4 for 1 split yesterday.
I don't know if it was 4 for 1 or 3. It split.
Yeah,
split.
4
I
for
can't
1.
remember what it was. I'm so short term. Everybody jokes about me, my goldfish memory. So I can't even. I just remember having the trade, and I remember it had run up. I had written it down because it's always making notes and like looking for different things. But it had run up into the close. It had run up $4 into the close when it was like $150 or $160 stock or whatever it was.
Mm-hmm.
And so they had already really ran it up ahead of that close. So okay, so there's your chart. It didn't adjust for the split, but
No, it
what was
didn't
the
yet.
price? It was
240.
Yeah, 240. So literally it looks like it split 4 for 1 yesterday.
Yep.
So anyway, so it had run up $4. It had actually had a pretty big buy imbalance into the close, and I was like, well, that's all order flow based. Now, if you bring up the chart from yesterday, Kyle, if you can just go to yesterday's chart, you'll
Yeah.
see this stock actually opened right at the high yesterday. It opened up, I think, around 61.87. I got filled at 61.87. It went up to 61.90, so it only ever went 3 cents against me. So I shorted the open on this because, first of all, it was opening up again, which I thought, well, they've already kind of ran this up ahead of the split. Now they're opening it up another 40 cents post split. I'm like, I think this is just not going to hold on. And just because that premise, I was actually able to get short the stock. Again, I covered too soon. I started covering. I think I got 50 cents off the trade, which is actually pretty good for me because usually I cover sooner than that, even the scalper mentality that I have. But it basically took no heat on it. So it was just a setup there. And I was looking, and my whole premise for it was like they ran this thing up pre-split. Now they're opening it up post-split. I was like, there's too much pricing in this, and they're pricing the split too high here. And basically, I just shorted the stock because of that, and it worked out well. So another one from yesterday was BWP. We had talked about on the pre-market show. I was like, they killed this thing right on. I think I mentioned this one anyways. I'm not sure if I did. I think I did though. I had it written down on my sheet to mention it. It had closed at 25.20. Well, it was around 25.20, and then the huge sell imbalance came out. So the symbol is Boy Walter Paul. It's Boardwalk Pipelines Partners LP, and in the last 20 minutes, the stock sold off 65 cents on just a big sell imbalance. So I'm like, well, that's an order flow reason. A lot of those moves get retraced. Well, if you bring up the chart from yesterday on this BWP there, Kyle, you'll
BWP
see
or
that
BWD?
basically, yeah, Boy Walter Paul. I'll let you bring it up.
There.
BWP. I'm not sure if you got the right symbol in there.
Oh, BW.
Yeah, BWP. So anyways, the stock sold off hard on the closing print. I was like, well, I want to own this thing on the open because I think it's going to get all this back. And it opened at like 24.73. I think I took 2 cents of heat. I think I got down to like 24.71 or 24.70 yesterday. And then it was just straight up from there. And I was actually able to make almost, the entire move back there. So if you bring up the chart from yesterday, you'll actually see it. Just going to the intraday chart, because I think that's the daily chart. Or is that the yesterday's chart?
Yeah, I got both
Okay.
days up.
Yeah, okay, so go back to the other chart that you just saw. Yeah, so you can see it opened right at the low and went straight up because the day before that,
Mm-hmm.
it had actually just given all that back. So it was an order flow reason. You can see right there. See the
Huge
big
candle,
sell-off?
yeah.
That whole reason was because of a sell imbalance. That's a really
That
good
was
chart.
Friday,
Let's see.
right?
Yeah, on the Friday we had a lot of sell imbalances come in, and those are just some institutions just wanted to get out, or a few institutions were jockeying, they wanted to get out of the positions. Those are order flow reasons. Those moves often get retraced. Statistical probability that move will get retraced. It doesn't work 100% of the time, but I'd say it probably works 60 or 70% of the time. It's
So
pretty
from a
good
from a
edge.
from a market standpoint, though, you got to have new buyers because that's obviously not the same buyers coming in back at the 24.6 level here after the sell-off, right?
The way I always say it, and I don't care who the buyers are, I just think they're going to be there because you have fundamental reasons to move the company around. You'll have technical reasons that'll move stocks around. When it's purely order flow based, a lot of times those moves aren't fully real. They're just because one guy wanted out. So I always say, well, that's not really a real move because it wasn't based on fundamentals. It wasn't based on technicals. It was based on order flow. Those are moves I like to fade. So when this thing was just getting killed off the bat because one participant wanted out, I want to be a buyer of that stock. I actually didn't get the close. On some of these stocks, I actually would try to buy the close, but I didn't notice this one. I just noticed it after the close. So I wrote it down. I was prepared because I was like, this gap down 70 cents. It's a pretty low beta. It's one of those LPs. It doesn't move around even a lot. So it was a big move for it. 70 cents in the matter of 20 minutes. So I wanted to own it if it opened anywhere near where it closed. It opened up 20 cents. So I'm like, well, that's good enough. I definitely want to own this. I had an OPG, an opening only order to buy it higher. Got filled in the opening print, I believe, right at 24.70 or 24.73. And I was immediately up in it. I never took any heat. I sold it later on the day at 25.05, I think about 25 minutes later.
Not
But that's a
bad.
quick 1.5% trade for you there. And that's just, knowing the setup, knowing the reason why I was selling off, and obviously taking advantage of that.
Now,
And that's what we try to do as pros is we find, and nobody's looking at a stock like this, like who's even trading a stock BWP, but I've got filters and I'm searching for stuff like this. And I'll try to tell you guys on the show too, obviously what I'm thinking too, to help you out. And this is another of those examples where you basically could have just faded that closing print move, and it basically got all the losses back in about an hour.
Now, what did you actually buy the stock or did you buy options?
No, I bought the stock. And it's hard. I don't even know if there's options on this thing. So
That's a good
I'm,
point.
I'm not a big options trader. Like I'll trade options more to get leverage. When I really think there's going to be a move, I'll maybe go into the options trying to grab leverage so I can really get some exposure to it. But I'm an equities trader. That's what I'm, true and blue equities trader, where I like to trade the actual stocks. So, sometimes the options, it's all timing a little bit, and trading is all timing too. But, if you're buying an option a weekly and then, maybe the move comes after that. So I like to actually buy the stocks because I'm always fighting. If you're buying options too, you're always fighting the time decay too on the options. You're not in the actual stocks. Nothing decaying on you. It's just, costing you margin or, lever or, just the cost of holding the stock. Unless you're shorting stocks, which can get a little tricky because then you can get cost to borrow and other expenses involved in that too. But for the most part, I'm an equities trader. I like to stick with the equities. And this is just one of those classic cases. There was a lot of stocks yesterday. Like we can bring up multiple charts. If you bring up this one, bring up like this chart of like IBM. This was another one that I actually got a little piece of on the close. But if you bring it up, it was the same story. If you can bring up that same 2-day chart, the stock was trading around 181 and a half. Big sell imbalances came in Friday, knocked it all the way down to 180. And really yesterday, I'm looking at the chart here. Within like an hour, it had all those losses back. Now we were up on the S&P futures, so maybe you can say, oh, it was all S&P futures move, especially with IBM. But it was a lot order flow based here too.
The same thing.
Um,
Look at that volume right there at the close on Friday.
yeah, exactly. It was all just a huge sell imbalance. Somebody wanted out, an institution wanted out, and they got out. And
Now, are
there,
you
and
setting
obviously,
you set your sell level, your price target right back at the high from Friday, or were you setting your price target at?
no, usually I'll go if the move, and this is my kind of my rule of thumb. If a stock falls like a buck and a half, it's pretty greedy to go for the whole buck and a half back. I'll usually try to get about 50% of the move. So if it falls a buck and a half, I'll try to get maybe like 75 cents up. In the case of IBM, I actually got out. I think I actually snuck out a little bit of it even pre-market, and then right on the open, I think it opened up like 181 or
I
something.
would
So
write that down if you're listening. That's a huge lesson right there.
my goldfish memory, I don't even remember what I said, Kyle.
Half.
Repeat it.
It was so good. I'll say it again. If you're off an order like this, I asked, would you go back to the highs of the day on Friday as your price target? And you're talking take half. Don't get greedy.
Yeah,
If it's a
that's it.
buck and a
Because
half
you're going
move,
for the
take
whole thing, things
75%.
can get ugly here, and then the S&P futures can move. And you know what I do? And like I'm a major hedger. So if all of a sudden I'm long a whole bunch of stocks on the close, I'm not just gonna go naked long, obviously, and into the next day because now I have market exposure. I'm trying to grab an anomaly of these stocks, individual stocks selling off too much. So what I do is I go and actually grab the SPY long to hedge my overall position because I believe these individual equities close too low. But I don't know about the market. If the market opens down 10 points on me tomorrow, just because the equities close low doesn't mean I'm going to make money because then the market went down on me. But if I buy the SPY to hedge myself, or if I short the SPY to hedge myself, in this case, then I would be okay. So if I get long net $100,000 or $200,000 worth of stock long on the close, I'll short some equivalent on the SPY just to hedge myself and try to lock in that anomaly. So now all of a sudden I'm taking the market risk out of the equation. And that's the difference, obviously, 14 years of experience there. I've watched, back in the day, I probably bought those stocks naked long, came in the next day, market opens down 10 points on me, and I don't make anything or I lose money. And I'm like, well, that was stupid. I should have just shorted the SPY and, hedged myself. So we're big hedgers at Bright, trying to take out market risk. I'm trying to grab anomalies. And that's why I love trading the equities because you get these little individual anomalies. When you're trading the market itself, I mean, it's the market. What are you hedging with? So, but individual stocks, you can turn around and do some fun stuff and hedge it,
That
hedge
is.
your market risk away.
Let me
So
ask
trying to,
you. Go ahead.
yep.
Let me ask you a question. So how did you screen for maybe not IBM but BWD? What are you screening for to see something like that in the imbalance sell off?
I've got filters, so I mean, I've actually got written stuff. I've got filters on that search through all and show me the larger imbalances. So that helps a little bit too. But I'll tell you, where you could go actually for some information too. Free site is like this Market Watch after hours. I'll post the chart or the link in the chat there. Just when we get done the show here, I'll post the link in the chat. So if you stick around, but you can go to this after hours and it'll tell you after hours movers. It just, that's just a free. I have like filters that I, look at this stuff, from a professional standpoint. But I'm just saying this is a free resource out there for the retail guys that don't, pay $1,000 a month for filters and everything else. So I'll post that up there, and what you can see is after hours movers. And if you see something coming back a lot in the after hours, that probably means it had a pretty good move. Then you bring up a chart and you're like, you can see see from the chart, after you look at it, you're like, oh, well, something happened there. You see the huge volume spike. Well, you can just put your whole thing together. The chart's telling you this thing probably had a huge sell imbalance and sold off really weak. Like, bring up Berkshire Hathaway. Can you bring up BRK? Brent, do you know what the symbol is for bringing that up? It's BRK.B. Is it BRK.B in the Benzinga
Let's check it out.
site as well too? Try BRK.B. Same story. As I know Joel can bring up the Berk. I'm just trying to make sure that that's going to work.
Oh, it sounded like a challenge to me, Brent.
Brent, you there? I think it's BRK.B. Like, that's the symbol on all of our systems. I'm just not sure if it is on that system to bring up the chart.
I'm trying to bring her up right now. I'm not sure if this is the right one.
Could try BRK/B too. Like, sometimes those work, but.
There we go.
You got her?
Yep, she was slash.
So you can see BRK/B. Same story here again. There was, this was the story from Friday. It was a huge sell imbalance. It knocked down a stock like Berkshire Hathaway on the closing print. Literally went down
115.
about $1 there. Yeah. You see the huge spike down?
Oh, yeah, right
Berkshire is a great one because that's really just like a mutual fund. So there's no company individual specific news. It trades like with the market. So all of a sudden, if you can buy Berkshire Hathaway down $1 and you can buy against that, equivalent and hedge yourself, the odds are it's going to come right back. So
Look at that volume on that. I mean, that thing
it was
just
huge.
massive.
It was huge sell imbalances, and that's and I was tweeting that out, like we were tweeting that out, and obviously trying to give you guys an edge. And we say, third Friday of the month, the imbalances can really push stocks around, and it did in this case with the Berkshire Hathaway. Really knocked it down, and the volume spikes way up, and it knocked the stock down $1 on the closing print. That's $1 that shouldn't be knocked down, and obviously the market got it back right away, and then it continued to run and repriced the Berkshire Hathaway for the another 10 points that the market was up, or the another 8 points that the market was up.
Let's see if our users remember. We had the third Friday of the month. What was it, the last Friday or the last day of the quarter?
Yeah, last day of the quarter is usually awesome, but even last day of the month is pretty good.
Last day of the month. And you said
I would
something in
say
June, right?
the big imbalance days where stocks really get pushed around, where you want to look for these anomalies and where you want to try to take advantage of these, are the third Friday of the month, the end of the month, and the end of the quarter is huge. And then any rebalance day, the biggest day of the year is always the Russell rebalance, which is the last Friday in June. So the last Friday in June, you'll see crazy stuff like this all over the place. And when you see a stock gap down $2 on no news on the closing print, it will often retrace that move. And then it's not saying it's doing 100% of the time, but a lot of the times it will get that move back. So those are just, again, as traders, we live in the probabilities, not the absolutes. And if we can get an edge there, and if it's right 60% of the time, we're going to make a lot of money on that in the long run. As you play that strategy more and more and more, you're going to make a lot of money. Again, knowing how to control your losers. It doesn't work out for you. Not everything works out. You need to know, obviously, when you're on the wrong side of the trade and when it's not working out. And again, how do you know you're on the wrong side of the trade? You start losing money. So a lot of these trades I just showed you, I didn't even take any heat on them because everybody was coming in after me and, saying the same thing. Pros were bringing it up. High frequency traders know the same thing. They've got all the stats and their own machines, and they're going to, pump the stocks up to where they should be too. So lots of market structure lessons here and lots of market structure talk here.
It's this is
Benzinga's
good,
OptionsHouse
man. This
this
is,
morning.
I mean, if the imbalance thing is something that how long into your career did you learn something like that, or where did you pick that up? Because I feel like it's just another trade idea that you can use or another trade setup.
Yeah, it's another trading tool right away. But I started with a prop firm. I was with Bright Trading in 1999, and they're teaching you stuff like that. So you come in. I came fresh out of university, not knowing, you think you're a young buck, and I was trading retail back in the day, just with a little bit of my parents' money. And I thought I was a hero. You come in there, you think you're a hero because obviously I was in a bull market back 97. I started trading my parents' money 98, 99. I'd buy any stock and just by BS luck it was going up because everything was going up back then. We were in the tech bubble. So I looked like, I thought I could do no wrong. I tell you, coming into a professional firm, you really can find out in a hurry that you're not as good as you think you are. My first week at Bright back in May of 1999, I remember I made money the first week, just a little bit of money, and the next week I just got absolutely slaughtered. I had one day I lost on 18 trades in a row. I'm like, how is that even possible? How is it possible to lose on 18 trades in a row? I think it was the record in the office. So I was like, man, I'm just not very good at this. So you learn in a hurry. So the next 6 months was a big learning curve for me. But I'm learning stuff like this. I'm learning different tools, and that's what we try to teach you here on the show. We're trying to give you guys these different tools to put in your toolbox, so that next time you see some of these setups happen, you can use these tools and say, oh yeah, I remember when Dennis was saying this and this worked for him. Maybe I'll give it a shot, or different setups in that. But remember, nothing works 100% of the time, and you got to obviously be aware when you've made the wrong call, and you need to limit that risk. Trading is all about discipline, and it's knowing about when to get out of those losers, or otherwise your losers will become big losers, and you'll lose your week, you'll lose your month, you'll lose your year. Don't let that happen.
All right, Dennis.
So,
Let's move on to a little bit of gold, crude, and futures here at 8:35. We have Christian Tharp on in about 10 minutes to talk
yep.
about some of his favorite stocks. What do you? I know gold is crossing that 1200 level, or looking at 1200 level. What are you seeing in crude and futures?
Well, the gold, the magnet $1,200 level is there right now. We are at 1,200 on the Kisser on the Jan futures, $1,200.50 here on GC. So it's actually had the big sell-off there from about a week and a half, going up to the 1250, 1260 area. We cut through 1230 like a hot knife through butter just a couple of days ago. We bounced up, and now we're kind of hanging out here at 1,200. I tell you though, the gold trade again, it's hard to be a gold bug, hard to be a gold bull when the market continues to rally. It's going to take a market sell-off or something for this defensive type of trade to start getting hot again. And I think if you're looking at picking bottoms in gold, you're looking at it from the wrong side right now, because it's just not going to get life here until the market starts selling off. So when you see the market start to roll over and fear starts coming in this market again, that's when gold might have some life. Until then, I think gold's just a dead trade.
And right now,
Um,
there's not a lot of fear in the market.
There's no fear in this market. The fear in the market is the fear of not being in the market.
Mm-hmm.
I talk to people, like out on the street or whatever. They're ticked off every day this market goes up. People are angry about it because they sold all their stocks
Yep.
back in 2008, 2009, 2010 when the market was at the lows, and they got out because they were scared back then. And now they're looking at the market, basically tripling here since the 2008 lows, and they're mad as hell. And they're like, I'm not buying it up here. It's going to pull back eventually, and then I'm going to buy. And that's why every time we get a little bit of a pullback, people come in here and buy, because the whole massive world is underinvested, this market. When you put this whole thing into perspective, though, and I've been bullish here for the last 2 years, but I don't know, eventually I am going to get bearish again. Joel calls me the eternal bull because we've been doing the show for a while. I'm always bullish, but I tell you, back in the credit crisis, I was pretty bearish too. I was talking about digging, a hole under my house here, and and throwing all, because I thought the banks were all going under, especially after the whole Lehman, Bear Stearns, Merrill Lynch, all the debacles, Fannie Mae, so much problems back then. But people were scared. They were scared. I was scared back then too. And I wish I would have just backed up the truck and bought all the stocks. I bought a little bit of stuff. I wish I would have bought a lot. I didn't buy nearly as much. It was a buying opportunity of a lifetime. But when you put the whole last 14 years into perspective, or 15 years, we were basically, at S&P 1600 here back in 2000. So really, if you look at the last 14 years, we're only up a couple hundred S&P points. So can we go further? Absolutely. We are nowhere valued like we were back in the tech bubble, back in 2000, 2001. Are we fully valued? Maybe, but we're not overvalued. I don't think it's the whole market here is like, oh, this market's so expensive right now. What was expensive is back in the tech bubble when you had companies that were making nothing, or not even the
No
potential
revenue.
really in the long run to make nothing, getting valued with multi-billion-dollar market caps here. It was crazy back then.
Mm-hmm.
And I know a lot of the traders are new here and they didn't live through that. I did live through that, and I tell you, it was a lot more of a bubble back then than it is now.
I just read one of Jim Cramer's first books about the tech bubble, and he was saying when stuff would get priced, these things would just absolutely rip up with no rhyme or reason, just all based off of the issuer. And he even talked about his own company when it went public, TST,
Stick.com,
and
yeah.
that thing went from, I think it got priced around like 19, 20 bucks, 19 bucks, ripped up to 60 something, and it hasn't
Yeah.
seen an update since, and it's down to like $2 because it was based off of nothing.
Well, that's just it. Like you can say, oh well, maybe Facebook's the same story, maybe Twitter's the same story, but these
They're making
companies got a
revenue.
billion users.
Yeah.
That's something real.
Yep.
That's something real. Like you literally had back in the tech bubble, you had companies that just had ideas.
Or
There was just
what
ideas,
was
and they're being valued at like $10 billion because they have an idea.
what
But
was
it
the
hasn't
famous
even,
one? Pets.com.
Pets.com. There
Pets.com or
was,
something like that. It didn't have anything, but it had a great URL, so they
Mhm.
priced it at $1 billion or something.
yeah, you literally had companies that had like 14 employees and and just a decent URL getting priced at $1 billion. It was absolutely insane. So, and that was the tech bubble. And that's when we watched the NASDAQ go from like 2,000 to 5,000 in like a year. It was absolutely, or a year and a half. It was just crazy. That was a crazy bubble. So this, you can say, oh yeah, maybe we're overextended. Maybe we need a pullback. Maybe that's all true. But I don't think this bubbles is coming and bursting here. We're going to be back at S&P 1200 next year. I just don't see that happening here. I think everybody that's underinvested here is mad as hell. And until all those people that are underinvested say, I throw in the towel, get me in, that'll be the top. So watch for when you go to the gym and you got these guys coming and saying, oh, I just bought these stocks and they've been so good, because that's your tell. Always
Get
the
out.
sentiment even in the real world.
It
And
is.
sentiment in the real world to me right now is people are angry. They're angry that the market has went up this high. They're angry that they sold in 2008 and 2009, and they're underinvested. And that's why this market continues to go higher. So I don't know when this turns. It will eventually turn, but I don't think it has to turn. That's what I'm just saying here. I could stay bullish here for a while.
The
So,
eternal bull. We got you.
I'm the eternal bull right now. I will get bearish here again, but right now I'm still bullish. I'm not getting off the bull train, especially when we're making new highs. Why am I going to fight the tape? So, but let's just look here. It's funny thing is we've been talking about so much
Gold.
market stuff. There really wasn't a lot of news today here, guys. So I mean, we're
Nah.
not really holding news back here. Brent, did you have something that broke just a while ago?
Yeah, we did get a few ticks higher on the S&P futures, kind of coming back down now, 1823. But we did have strong durable goods orders for November, 3.5% gain. Economists were looking for about a 2% gain, and then the core number there was up 1.2%. Economists looking for a gain of 0.7%. So that was that tick higher in the S&Ps just I don't know, about 10 minutes ago or so.
What do you got at 1823?
1823 on the button is what I see right now.
1824.5 is the high today, so very tight. And Matt, remember we close at 1 o'clock here today. This is a shortened trading day. Typically,
Yes.
from my experience on these days, you'll get some action in the first 20 minutes. You'll get a little bit of volatility, a little bit of chopping around, and then it's usually a snooze fest.
People are drinking eggnog and
The traders come in to trade the open, and then they're like, I'm done for the day now. I'm going, and taking it easy. So you'll get some action on the open. You might get a little bit of action on the close, but it's probably going to be a snooze fest after that.
So is that just like a warning for kind of a lack of liquidity, Dennis? After?
Yeah.
Okay.
You will have, that's the one thing right off the bat, you will have a lack of liquidity here because there is obviously going to be a lot less traders trading. It means there's less orders on the books, which means anybody that really wants in or out will have to really push the stocks around to, or really get, there's going to be a lot more price impact if some institution really wants to buy it because there's going to be less orders on the book. So you got to consider that too. So stocks can get pushed around here. What's happening with Tesla? I'm just looking at it right now. And actually, it's just like $5 here right now.
Woo!
Is there news that just broke?
Brent,
here
do we
on
get any
Tesla?
news on Tesla?
They're up $6 here now. I've been watching it just for the
I don't
last
see
few
anything.
minutes, and it's just slowly been climbing here in the pre-market. I've got over on my filter as I've been doing the show, and I was like, what is going on here with Tesla?
If there's Tesla news, I'm definitely breaking in with it. And that news item might be they
look at
bought a
this tick.
dealership in Alaska. That's big news for Tesla. But no, I'm not seeing anything right now.
You don't see anything right now.
It looks like, I don't know if you've seen late yesterday, Dennis, there was something from the NHTSA that said that they're going to keep their 5-star rating on Tesla's Model S. That was like, I don't know, around 2 p.m. yesterday. So maybe a little bit of digesting of that news still. I don't see anything recently.
Because the market actually sold off into the close there, Dennis.
Yeah, and I'm
Not
just
heavy,
looking at
but-
that chart here too. We've really just popped here. When are those bars from? Like in the last 20 minutes, where we really started popping up there on Tesla.
Yeah.
She had a rip from just below 146 to above 148, now sitting at 149.35.
Yeah. Well, regardless, we know support's very well defined down there in the 140. I'll try to. I don't really like shorting this one because I think the stock's eventually going to start going too, just because all the other Momo stocks have been taken off,
riding.
and this one hasn't, had as good of a close to the year, obviously, as some of these other ones have. But I think there's still people that are trying to pick bonds and trying to get in this thing here. So I like this more in pullbacks than I do, and I still keep thinking it's eventually going to make a run for the 160 level. Although the last few days it was selling off there, but now it's breaking out here again. So I don't know if I'd be fading this one. I feel like you got to be buying pullbacks on this thing, but I don't know. Long term, I'm not sure. Short term, I'm not a big fan of shorting the stock right now.
Something we'll discuss a little bit more after Christian Tharp comes on here in just a couple minutes. I've seen a ton of reports on retailers having a quote-unquote crappy month. Or what did I say to you earlier, Dennis? What was the
Yeah,
Amazon
you
and
had that
eBay.
market watch. What was that article there you sent
How
Market Watch about?
Amazon and eBay stole Christmas. Two online retailers will take a hefty share of shopping sales.
We should put
So,
that
Oh,
as a
they're
link
so
in the chat
bad.
so they can read that article too, or the people in the chat, because that's an awesome title for an article. So what was the whole premise of the article? What were they saying in it, Kyle?
they're just saying that the last 2 weeks we've seen big box retailers, actual brick and mortar stores sales decreasing, and Amazon and eBay have eaten their lunch this year.
Oh,
And we talked about it
boo-hoo.
yesterday morning. I mean,
Yeah.
when my mom's coming to me, it's kind of like that real world sentiment. When my mom's coming to me, she's going, "Yeah, I didn't step." Actually, you know what she said? She went into one store, KSS, Kohl's, and that's because
Yeah.
she had Kohl's cash. But besides that, she bought everything on Amazon.
Wow.
And when that starts happening, that's real world sentiment.
You know what? My dad was all over the Kohl's promotions also this year. A little anecdotal evidence on Kohl's.
How's
Ooh.
Kohl's make money? Because you know what? Ever I go to Kohl's, I go in there and you go and you find, the shirt's regularly $49.99, but it's on sale for $20. And then
Yeah.
you go to the register and you get another like
Yep.
20% off. It's like 15. It's like
Well, no,
if
I
I go
just
to the register and I actually pay the price that I think I'm paying, I'm disappointed with it now.
so
I want that extra 20%
if anyone
off.
out there is really into retail sales, there's one guy you got to follow on Twitter, Brian Sazi, and we have him on the show a bunch. And I just saw him tweet. I actually asked him, I said, "What does Brian Sazi think of retail sales this holiday so far?" And he says they're super weak. And then he went on to say that KSS's average, there it is, average discount at Kohl's this morning, 57%. That's what they do.
Holy cow.
That's their thing.
57%. But then you know what they do is when you buy something, they give you an extra $20 to buy next time. So you get in this
Get you
loop
back
of
in.
continually buying at Kohl's. I mean, I do it all the time.
I like shopping there too. It's cheap. I just don't know how they can sell these, jeans for 15
No
bucks and
idea.
stuff. And when they're $50 somewhere else. But I guess they're just pushing so much volume out there that, they just keep it going. So, I mean, the stock's done pretty well. This is a stock that's actually, if I look at the charts on the KSS, had a pretty decent year. Started the year down at 41 bucks, up at 55. So it's been a pretty good year for Kohl's.
It's like
Not bad.
30%.
Yeah, it's been a pretty decent run. So, but that not like the Amazons on the eBay. Holy cow, that thing! Amazon made new high yesterday again. I got up to
Oh
405.
my gosh.
So,
I love
only
I
thing
love
that,
reading the proverbial Amazon bears that just say there's absolutely no rhyme and reason, and they're all getting smoked.
oh, it just keeps climbing. It just keeps climbing, and I mean, that. But look at the sales. I mean, everybody's buying,
Amazon's
like you said,
an
everybody's
amazing
buying
product.
stuff on there, and they reinvest in themselves. I mean, like we obviously had the analyst on there last week. You remember he was talking about, Amazon. Well, sure, they're not making money, but they're reinvesting it in themselves. If
Yep.
they actually started to keep some of those profits and not reinvesting it in themselves, they actually would be making money. So, I mean, they're just looking at the sales figures increasing every year, and stock keeps going higher.
All right, folks, we're going to take a 30-second break here on the pre-market show, sponsored by the one and only OptionsHouse. We're going to be bringing on Christian Tharp to talk about some stocks, some trade setups, and some ideas for the new year. So hold tight. We'll be back in about 60 seconds. All right, pre-market traders, welcome back. This is Kyle Bazzi co-hosting with Dennis Dick this morning. We are bringing in a special guest, Christian Tharp. Good morning, Christian.
Good morning, Kyle.
Hi, very excited to have you on, buddy. Christmas Eve, short trading day here, and we want to get started here. You are one of the coaches on MarketFi, the education platform with Benzinga. So let's get started let's talk about, what is your approach to trading and what are you coaching over there on MarketFi?
Sure. Yeah, great question. And it's, believe it or not, that is something I always like to put on the table first because I tend to try to do things maybe a little bit different than the mainstream when it comes to coaching. Yeah, and I think that's why there's been a lot of gravitation to my approach, which is very much kind of getting back to the basics, getting back to the core fundamentals of trading. And a lot of that has to do with simple price action, has to do with protective stop measures, being your best analyst, looking at what prices tell us. And that's kind of where my niche has been made. I always encourage everyone that I work with from the very beginning to remember investors and traders were doing just fine, before software programs, trading platforms, and newsletters. And so there's a lot to be said with what we see in price. So my philosophy is to not only educate on that, but also educate on finding, the stocks and or the markets or the industries that'll speak a little louder than others.
So jump into some of these details. How do you, approach, your trading setups? Or are you looking for specific setups and then like trying to trade from those, or how do you approach it?
Absolutely. Everything for me is finding a stock that does provide that type of setup. There are some stocks that speak louder than others and make it a little bit more clear that, hey, look, if I do this, I should go higher. So, for example, a stock that was on a lot of our radars here recently was DHI, Delta Henry Ivory, which is DR Horton.
Yep.
To me, this is about as simple as it gets. If you want kind of textbook, what I've tried to relay is DHI had obviously been resisting $20, here for quite some time.
Right.
And anybody with any amount of experience could look at that and tell you the same thing. Unfortunately, a lot of times we're not looking for these things. Brokerage commercials and software trading infomercials, these things kind of lead us to believe we have to make it a little bit more complicated, which isn't to say that those things don't have a time and place. I mean, do not get me wrong, being a CMT, and I can talk your head off about some of that stuff. However, when you look at DHI, it broke through 20. I'd expect it to go higher. We jumped in. Hey, we're up close to 6% already, 2-3 days later. That's the type of thing. Now, not necessarily, and by the way, I don't mean something just channeling sideways. Other things, stocks may not be quite that simple, but it can be. ISIS, we were talking about, before I came on here, ISIS, which is Ivory Sierra. I think anybody could look at that stock and say, well, that stock seems to be resisting $40 here the past several months.
Yeah.
If we break through it, probably got a pretty good trade. Well,
yeah.
So far, so good.
Just your classic breakout trade there. Yeah, you're exactly right. You look back into September, you got up to 39.83, failed, sold off. Tried in early November, quick fail. Third time December trying. Now fourth time. Eventually, if you keep banging your head against the roof long enough, eventually going to break through it here, and that's kind of like what it just did there. So you got like filters that you're searching through. Like, how do you find these setups? Like, are you just looking through tons of charts here manually, or you got like a computer system looking for this? How do you find these setups?
Well, believe it or not, it's manual. Students are surprised when I work with them, but I always kind of mention I like to use the example of going into the batting cages. Okay,
Yep.
Now I played ball all my life, and I'd like to believe I can hit a ball, but when I first go into the batting cage, the 70-mile-an-hour cage, I can't catch up to the speed of the pitch right off the bat because I've played so much softball. But if I keep kind of watching the pitches, eventually I catch up to the speed of the pitch. And I always say it's the same thing with chart analysis here. Once you train your eyes to kind of catch up to what you're seeing, sometimes first we have to be looking for, but then next we have to be able to recognize some things are very simple like that. And I could ramble off 10 more that are like this. How I find these is I go straight to that source. In other words, I could not tell you if ISIS is a good company or not, what the industry is or is not doing, whether it's hot or not, what any analysts have to say about it, not relevant to me. What's relevant to me is I found a chart when I was flipping through them that showed a clear breakout point of 40 if it should happen.
Yep.
You know, so that allows me to very quickly, so I can be here talking to you, and I could flip through 15 charts and talk at the same time because my eyes are doing the work.
Right.
So
Just
although it
trained
seems
eyes.
strange, yeah. So when it seems strange to some of the people I work with, like, well, gosh, how many charts do you have to look at? I'm like, well, believe it or not, I probably have to look at, on average, 10 to 15 to find one that I really like. But then again, it only takes me about 30 seconds to look through those 10 or 15. And I try to coach and educate my students to do the same thing. And believe it or not, most of them take to it pretty quickly.
Now, Christian, are you looking for stocks that have, is there any filters on market cap or especially volume?
Yes. There's several. There's a few key issues there. First, when it comes to the price and volume, I do tend to try to look at a sweet spot, kind of in that $10 to $50 area. The $500,000 to $10 million in volume, average volume, 90-day. We are looking for generally that small to mid cap. These are stocks that are going to give us that right combination of risk reward. I also look for, on one hand, if ISIS here had no volume when it broke out, doesn't necessarily mean it won't go higher, but it certainly doesn't hurt the fact that it had, double the volume when it broke out. That's a positive sign. As I always
So the
like to say, volume adds validity, right?
Yeah, the volume would be a red flag for you. If it wasn't breaking out on large volume, you might have a little concern with that.
Exactly. If I saw, I always tell everybody, look, ISIS traded almost 3 million shares the day it broke out. That's a stock that averages 1.2. So that's not, me and Kyle saying, hey, man, what do you think about buying some ISIS today? That is money moving and pushing that stock higher. So if it means something, when we break through, then it should mean something to hold and to go higher. So, so I do like to see that if given a choice. If I saw two stocks side by side, one broke out on less than average volume, one broke out on, say, like ISIS here, then of course that would I'd probably gravitate to the ISIS.
Gotcha. Now, what other stocks are on your radar here? Because you've given us two here, and I like this, because you're saving me the work of looking through all these charts.
Sure. No, I love it. I love, the kind of looking at stocks and kind of showing these people. INCY, INCY, for listeners, Ivory, November, Charlie, Yankee. Love this one. Okay, this one I like. $50 had been something that the stock had resisted a couple times here over the last month.
Yep.
Okay, and this is a stock that also pushed up through that 50. Technically, it kind of pushed up above that 50, I think, on Thursday, but it really got a nice move volume-wise on Friday, where the stock pushed on about 4.5 or so million shares, almost 3 times its average.
Whoa.
So really kind of confirmed that push through 50.
So
now,
it sold back down and then ripped back. Okay, so ripped back up right on Monday. So you were you buying at that 50 level then, Christian?
Yes, when it pushed above 50, okay, and I saw it getting ready to hold, like I was fortunate to get in, because I like to see that hold, not the intraday move, but that kind of hold, that close. And so I realized that some people are not fortunate to sit there and watch the last half hour of the day, but it became clear to me that INCY was going to hold. And so when it held, that's how I was able to get in. Now, for those that can't, I tend to encourage a wait for a pullback. So, for example, if somebody looked at, you could say the same with DHI, we mentioned PHM, but say, for example, FLTX, Frank Lima Tango X-ray. Now, this one has a little bit different of a look, but this is why I always use that generic phrase. I don't like to use support and resistance as much as I like to say key levels. So if you look at Fleetmatics here, the level of 40 was important to this stock. It has been since July. Resistance, then support, then resistance again in September, resistance again underneath it. Well, we pushed up through it, a little bit of an increase in volume, and what I said yesterday in my morning market cast call was that, hey, if this stock tests 40 as a support, okay, we're going to expect that to now start acting as a support again now that we're above it, right? So traders that had missed it on that nice little move, the problem is, look, 41 and a half, 42 isn't really my price. 40 was. Yesterday, stock came down, hit 40. Exactly. I think the low of the day was something like 39.80 or something. You buy it at 40, and by the end of the day, I've got three 5-star students that are up 5% in this stock in a day.
Nice.
So stuff like that. So that's kind of how I look to trade it.
Question: how do you control the risk? Because sometimes you'll get these breakouts that are actually fake outs, I call them, and then they all of a sudden obviously don't. So, okay, this stock broke through 40 and it's a classic setup, and it didn't give you any heat. this stock goes down to like 39, 38 or something, or would you let it get that far out of your, or are you looking like if it takes out the old level there that maybe you're going to cut the loss, or how do you control the risk?
Exactly. That's textbook. That's textbook what I coach. That, we're looking at stocks and we're putting probabilities. Probabilities say we broke through resistance, we should go higher. Probabilities say that level should now act as support if we come down to it. However, as I always like to say, the market reserves the right to change its mind, right?
Yeah.
So we want to protect ourselves. My expectation of this stock would be that if I'm right, it should run to the next level of 45 on the way up. All right. If I'm wrong, I'm going to set a protective stop underneath me in case it fakes me out. Now, one of the ways that I personally, I know some people don't like to wait and don't like to miss the boat, but I'm a huge fan of waiting for the close. That increases the probabilities that it was a legitimate breakout. In other words, if I look back in November, twice the stock peaked its head above 40. If I tried to jump in on that intraday break, obviously the trade's not working out. Notice the difference here if I wait for the close. The stock did actually close. Not only did it close above 40, it closed around 42.
Yeah.
Okay. Volume was good. I wouldn't say fantastic, but it was good. It was an increase. So that adds a little bit of, believe it or not, reducing risk, because this should be a higher probability trade than, say, if I did an intraday move. But again, coming to 40, we throw in a protective stop. We put ourselves in a good risk-reward scenario.
Where would you put the protective stop, just on this one, for example? Like how low?
Depending on the individual trader and what their, the kind of maintenance that they would have in the trade, somewhere in that general 2 to 3% below the 40.
Gotcha.
Is
So
where
you're
I want
looking
it
to come in, pick a 5-7% move up, and lose maybe 2 to 3% on your losers, right?
Well, I'm looking for more of something in the 10 to 12%. I'm looking for this run
bigger.
to 45.
Yeah.
Now, a day trader, I coach people that want to be day traders. They could have easily closed this thing out yesterday for 5% and called it a wrap, and the stop loss would have been a little bit different for them.
Right.
But my bread and butter and what I encourage is more of a swing trade. So what we'd like to do is get this run. If you look back in August, we popped through 40, came down, bounced on it, went to 45, and then higher. This stock was gravitating here over the last couple months right around the 35, 36 area. So all probability say if we're right about this swing trade, we should at least make it to 45. So we're in a scenario where we're risking something around 1 to make 5 or 6.
Gotcha.
Okay, and you just don't have to be right very often if you put yourself in those scenarios.
The risk-return ratio. That's
1,
another
5, 6.
pro tip right there.
How long would you
So
hold, Christian, to wait for that on a swing trade?
I always say a good stock keeps you in it. So if I'm right about this, I would say a couple days, couple weeks should get us there. I encourage kind of analyzing the whole chart. So when you look at, say, for example, if we stick with Fleetmatics, how long does it normally take for it to swing from here to there? How long does it take to swing from here to there when it's the run I'm looking for? So, for example, in August, it took about 1.5 trading weeks to get from 40 to 45, right? If I look in November, when it came down to 35, it took about maybe a little over 1 trading week to get back to 40.
Mm-hmm.
So if I would, if I'm anybody in this trade right now, I would say, well, you probably expect a trading week to 2 to get there.
Right.
But this
Now,
nice move to 42 is a good start.
When you're in these swing trades, and obviously, it's one thing to be a day trader, you don't get impacted by news very much, but when you're in trades for a week and a half or 2 weeks, obviously individual company-specific news could come out and ding you. How do you handle that? Have you been in situations where that happens, and what do you do in that situation?
Absolutely. Great question, and it's a very common question, especially from retail traders still kind of learning the ropes, because typically we tend to put a lot of emphasis on these bad happenings. So part of it I say, well, what are the odds of it happening as a general norm? In other words, I cannot count the number of times somebody has said, but Christian, what about something like the flash crash? And my response is always, you mean that thing that happened one time in the, in the last, we're not going to build a trading approach around something that happened that one time. We're going to build a trading approach around what happens the rest of the time, So same thing. One of the things we can do is make sure before we ever get into any stock that we're not getting into it before an earnings release is coming out. So that's something we can avoid. This stock, for example, doesn't have earnings until mid to late February. So we're good. Now, as far as the surprise news, Exactly. As far as the surprise news, I always say, well, let's put it this way. There's a yin and a yang, all right? Yes, it is frustrating for me just like anyone where I wake up one day and Credit Suisse downgraded a stock I was in and it tanks 8%. On the flip side, I have never offered to give back the profit when UBS upgraded a stock I was in, so I call that a wash.
Yeah.
Christian, are you just buying the stocks, or are you shorting and or using options?
Yes, I do both. I tend to stick with stocks in my coaching, only because I'm a huge fan of limiting risk, and I know that options are very, very complex as far as limiting versus increasing risk. But for what I coach, a lot of times when people are learning the ropes, they're putting themselves in much, much higher risk scenarios. Me personally, yes, I definitely short stocks. Options can be very, very profitable if you know how to use them. But from a coaching standpoint, I always try to make sure that the students I work with don't hurt themselves trading stocks before they start getting into options, where they can find themselves losing, obviously 50 to 100% of their money in that position.
Got you. So it's about the risk then.
Yes. Now, for me, obviously, I started as an options trader, so I think they can be very, very well. There's obviously a lot of options traders who do very, very well. From a coaching standpoint, what happens is a lot of times we don't have the basic fundamentals down, and then we kind of shift in options, which sound great on the surface, but we put ourselves in a position where the bottom line is this: if you are letting your losses run on you, say in stock trading, that's not going to have near the detrimental effect that it would in an options trade. So that's why in my coaching I tend to say, well, let's focus on stocks first, because I'd rather you not hurt yourself and wake up down 75% the very next morning because you broke a rule.
How?
Yeah, that wouldn't be good. Now, I'm looking here. You're the editor, and you've got this Today's Big Stock newsletter. So I want to know, what is today's big stock?
Sure. Today's big stock, very similar to the 5-Star Stock Watch series that I write, where what I am doing, everything we've talked about in this interview today, is what I'm doing for anyone that wants to read it right there. I mean, I go out and I find stocks. People ask me all the time, well, Christian, you don't pay attention to the fundamentals, but on today's big stock, you have all this about the company. And I say, well, yeah, that's a whole lot of cut and pasting, to be honest with you. I don't actually, it doesn't matter to me one way or another. What I'm trying to find is a chart where I have sifted through, because it's easy for me to show these to someone and for them to say, well, gosh, Christian, yeah, I could make those trading decisions too if I had stocks like that. Exactly. That's what I'm doing. I'm going and finding stocks like that speak to me. I can trade based on price solely because I'm selecting stocks where price tell me where to trade. So with today's big stock, that's what I'm doing. I'm finding a stock where I flipped through 5, 10, 15 stocks, 20 stocks, and I found, this one here that looked fantastic to me. ISIS I just wrote about recently. So anyone that read that article, they kind of had a stock they could have thrown on their watch list, and I'm saying, hey, if this stock breaks through 40, it could be a great trade for you. So I'm doing exactly in that article what we've talked about today.
What else you got besides ISIS? I know you were looking at some of the home builders like Toll and KBH.
Oh, yeah, the home builders. And this was interesting, Kyle, because we had talked about this beforehand, and this is just textbook because I think you were talking about the fundamental news didn't seem to jive with what the stocks were doing.
Mm-hmm.
Right.
And that's why probably if I had to consolidate everything I teach and coach and educate is to kind of ignore what we may be reading and go find the answers ourselves. So, for example, DHI we've mentioned, check out Toll Brothers, TOL, Tango Oscar Lima. Okay, this is something that we've had on our radar for quite some time because if you look over the last 6 months, $35 has been a very, very strong resistance for that stock. All right, so if we break through it, we'd expect to go higher. Well, yesterday, reality, we probably did it on Friday, but we kind of held that. If somebody was watching Friday at the end of the day and we saw that we held 35 for the first time in 6-7 months, okay, check out the payday you're getting yesterday when we really popped through, okay, on almost double the volume, 6 million shares on a stock that trades about 3.5. Okay, I mean, huge jump. And notice Lennar Brothers, Lennar Brothers, Lennar, LEN, did the same thing. Lima Echo November.
Now, Christian, I still have the Toll Brothers chart up. That 35 is a major resistance. I mean, it kissed it 1, 2, 3 times in the last 6 months. What you said you're looking at it holding over 35. How long are you looking for it to hold over 35? You're looking for a close over 35?
Exactly. All I'm looking for is a nice, good, solid close. So
Okay.
notice how all those times it touched that 35, it could not close above it. Now, this stock has respected that 35 exceptionally well. I mean, if you look back, the furthest it ever went above it was back in July, where it got to like 35 and a quarter or something.
Right.
Okay, so this stock says, look, I am not going above that. Well, when you pop through it and you can actually close, you can hold. In other words, it wasn't pushed back down by the end of the day. I look for that close. The question when it comes to the execution of the trade is where is it closing at the time? In other words, FLTX, by the time I knew it was closing above 40, well, now it's at 42. Okay, so that's not really my 40. However, if I'm watching Toll Brothers here, closing just above 35, 35.10, 35.15, if you're watching, this is already in your watch list, right? You've been monitoring it for some time. It's going to close. You could have made this trade on Friday, and you get the payday yesterday when the stock takes off almost $2.
I got LEN up right now, so I'm looking at this hit. It kissed 38 almost 4 times. Set in the last 6 months.
And notice, Kyle, the stocks that we're putting up are so abundantly clear what it was I liked about them.
Mm-hmm.
Yeah.
Okay, I mean, I'm not having to say a word, and you're saying 35 on Toll, you're saying 38. Yeah.
Jumps out at you.
Yeah, and that's what I try to encourage, because notice how not once have we mentioned candlestick patterns, Fibonacci retracements, Elliott wave, MACD, stochastics. We haven't mentioned anything. Okay,
I like
so
this guy.
this is why everybody kind of gravitates, because especially for the retail trader, they're kind of been made to feel like, well, gosh, black boxes, algorithms, oh my goodness, high frequency trading, I can't win. Yeah, you can. Okay, yeah, you can. Just you need to find the stocks that give you the edge. And that's what I try to find and kind of show to the people I work with.
I feel like I'm
38 on Lennar. I mean, I think we, assuming, again, the market doesn't, take that liberty to change its mind, I love the idea of this thing hopefully challenging the 43, 44 area in the future.
I mean, everything you say, Christian, like I've been a prop trader for 15 years, and this is the exact stuff that I've learned over my 15-year trading career. This is excellent stuff here you're telling our listeners here today. With the setups, with, obviously, controlling the risk, with looking at what levels jump out at you here. So I couldn't agree more with everything that you're saying. It's just been a great interview, Christian. Do you have anything closing for our listeners here, like little tips for the day or tips?
Oh, sure. Absolutely. First, I appreciate you guys having me on. I always love, as you can see, I'm very passionate about what I kind of teach and how I trade. But I'll leave everybody, Dennis Gartman, I don't know how many people are familiar with him. Most that are in the market are probably familiar with him. 2 things I've heard him say, one of which is a part of his trading rules that I think they're perfect. One of which, I heard him in an interview once where he was being asked about his overall thought of where the market was going. And there was all the, a little bit more complexity in the question. And he kind of chuckled and he laughed and said, I've been in the market for X amount of decades. And one thing I've learned, and I've learned it well, is the simpler I've learned to keep it, the better I've done. And I noticed that in his trading rules, something he put that went along with that was complexity tends to create confusion. And then he goes on to say, when I keep it simple, I tend to do better. So I would leave everyone with just, those of you that are struggling in the markets, maybe try to break it down to the fundamentals and see how you do.
Use the KISS method.
KISS.
Yep.
Keep it
KISS
simple,
method.
stupid. Well,
yeah,
Christian,
exactly. Keep it simple, stupid. Although I did have a student correct me once and say, well, you shouldn't call people stupid. Keep it simple, sunshine. And so I had to apologize for the next 20 minutes. I had to keep apologizing. I wasn't calling you stupid, but yes, exactly. The KISS approach, exactly.
Well, cool. Well, Christian, it was an absolute pleasure having you on this morning, and I'm sure we will have you on again soon. Happy holidays, man. Enjoy the short trading day and the day off tomorrow.
Thanks, guys. Have a great one. Have a great holiday.
Thanks, Christian.
All right, Dennis.
I got to hop off here too, Kyle. It's 15 minutes before the open. I had to go and get ready to trade my open, so I'll leave it with you boys.
All right, I'll give you $100. You throw it on one of those lotto tickets for me, all right?
Okay.
All right, we'll be back in just about 30 seconds with some headlines from Mighty Joe Young.
Well, that was Christian Tharp from the Adam Mesh Group we just had on the pre-market info show. That was really great. Thanks for coming on, Christian. And we'll be moving into today's editorial headlines. Target's general counsel, Timothy Baer, spoke with top state prosecutors on Monday to address their concerns about a massive data breach as consumer lawsuits piled up against the retailer, and 2 U.S. senators called for a federal probe. Attorneys general from several states, including Connecticut, Massachusetts, and New York, have asked the company to provide more information about the cyber attack, in which hackers stole data from as many as 40 million credit and debit cards of shoppers who visited Target stores during the first 3 weeks of the holiday shopping season. Ray Irani, once the highest paid executive in the oil industry, is getting a $14 million lump sum as part of a $26 million settlement after being ousted as chairman of Occidental Petroleum. Irani, who joined the Los Angeles Oil Company in 1983 and was pushed out as chairman in May, will continue receiving lifetime security and financial planning services estimated at as much as $1.3 million a year, Occidental said Monday in the securities regulatory filing. The 78-year-old former executive has been paid an average of $90 million a year in total compensation since 2002, according to data compiled by the Los Angeles Times. Last year, he earned nearly $46 million after he gave up his role as chief executive. Some analysts said the severance agreement was an excessive final goodbye to an executive known for accepting lavish pay packages. Apple has acquired 2 companies working in the areas of mapping and note-taking as part of the company's strategic acquisitions, as pointed by CEO Tim Cook. The tech giant has purchased Broadmap, which specializes in managing and analyzing mapping data, an area where Apple has struggled in the past. The other company is called Catch, an Evernote competitor that was acquired by Apple in the last few months, according to CNET. According to the report, during the company's fourth quarter earnings conference call, Cook had said that the company had made 15 strategic acquisitions this year, and Broadmap and Catch appear to be part of that list. Hulu has failed to persuade a federal judge to dismiss a lawsuit accusing the video streaming service of illegally sharing users' viewing history with Facebook and business metrics company ComScore. In San Francisco last Friday, U.S. Magistrate Judge Laurel Beeler rejected Hulu's argument that viewers needed to show actual injury to recover damages, even if they qualified as aggrieved persons under a 1988 federal law protecting the privacy of video renters. That law, the Video Privacy Protection Act, or VPPA, was adopted after a newspaper published an article in 1987 about movies that Supreme Court nominee Robert Bork had rented. Hulu had argued the law was not adopted to impose multi-billion-dollar liability on the transmission of anonymous data where no one suffers any actual injury. Beeler, however, concluded that the statute requires only injury in the form of a wrongful disclosure before damages might be available. She did not rule on the merits of this case. Hulu is a joint venture owned by Comcast, NBC Universal, 21st Century Fox's Fox Broadcasting, and Walt Disney's ABC. Chief Executive Mike Hopkins said on December 18th, Hulu will post a $1 billion revenue in 2013, up from $695 million in 2012. More people download apps on December 25th, largely because more people received new phones on that day than any other, according to The Atlantic. Like that new electronic football set or Game Boy, a new phone must be tested and toyed with within hours of when it is received. Thus, so are its apps. Overall, people downloaded 328 million apps on their smartphones or tablets last year, and that total is expected to be surpassed this season, according to The Atlantic. Audio equipment is among the top-selling electronics gifts this holiday season, accounting for 13% of the $8 billion in consumer electronic sales between November 24th and December 7th, according to the research firm NPD Group. Headphone sales rose 14%, soundbar sales grew 80%, and streaming speaker sales nearly quadrupled. The trend is being driven in part by the economy. Audio gear, which can range from $50 to more than $500, is being considered by some an affordable luxury during a still shaky economy. Americans also have spent the last several years buying tablets, smartphones, and TVs. Now, many are looking for ways to squeeze better sound from those gadgets. It stands to reason that people at some point want a better audio experience than the earbuds you get in the box, said Ben Arnold, NPD's Director of Industry Analysis. According to Israel's Ben Gurion University, who did a bit of research on this using the Galaxy S4, Samsung's Knox security system is actually vulnerable to malware attacks. To be specific, Knox is apparently capable of allowing these malicious forces to read through the secure data as well as emails. Samsung is aware of these findings but has mentioned that they don't hold any weight and that a regular corporate user would have plenty of other apps installed to stop this from happening. While Samsung hasn't taken the issue seriously, it has given away the fact that simply having Samsung Knox on your device won't keep your Samsung smartphone from getting malware attacks. Today's trivia tidbit: astronauts Rick Mastracchio and Mike Hopkins, floating in the International Space Station's Quest airlock module, switched their spacesuits to battery power at 6:53 a.m. this morning, officially kicking off a planned 6-hour Christmas Eve spacewalk to complete repairs to the station's cooling system. Switching roles for their second spacewalk, Hopkins will spend most of the day anchored to the end of the station's robot arm, while Mastracchio will assist as a tethered free floater. "Let's go to work," Hopkins said just before floating out of the airlock as the space station sailed 260 miles above eastern China. Assuming the repair work goes well and a third spacewalk is not required, 2 Russian cosmonauts will venture outside Friday for an already planned excursion to install cameras on the Zvezda command module that will be used by a Canadian company to beam down high-definition Earth views to subscribers around the world. Today's spacewalk is the 258th by the U.S. astronauts, the 176th devoted to station assembly and maintenance since construction began in 1988, and the 10th so far this year, as well as the 8th for Mastracchio and the 2nd spacewalk for Hopkins. That wraps it up for today's editorial headlines. Just a reminder, ladies and gentlemen, that this show would not be possible without our dear friends at OptionsHouse, who will give you 150 commission-free trades just for signing up with an account through this page. There's buttons at the top and the bottom right. Click on them, open an account through OptionsHouse, get 150 commission-free trades just for listening to Benzinga's pre-market info. And with that, I'm going to hand it over to Brent here with some analyst ratings and movers before the opening bell.
Hey, buddy.
Hey, Brent.
What's up?
Not much. How about you?
Good.
Did you get all your shopping out of the way?
Yeah, I did. I was successful.
Very good.
It's a great feeling. It's like I oftentimes get a little overwhelmed when I look at my Christmas list, and then every single year I get done with my Christmas list and I'm like, wow,
I haven't
got some
started.
good stuff.
I actually still have a
I'm
few
not-
today.
I'm not concerned for you, Kyle.
I haven't started.
I think you got this.
I have to everything I need for tomorrow. I literally have to do today.
Well, I got some hope for you. I walked into one store and I looked around for about a half hour and I was like, I could buy something for every single person on my list in here.
And did you?
Almost. Yeah, almost. So I don't know. I think you got this, Kyle.
Your confidence in me makes me feel like I can do it, Brent.
Yes, that's what I was planning, buddy.
Yeah.
All right, so let me hit you guys with a couple of top upgrades, downgrades. There's like 5 today, so I'm pretty much just reading off all of the calls this morning. But that's what happens on a holiday abbreviated trading day. Couple the upgrades that we got this morning. Watch shares of Allergan, that is Alpha Golf November, got an upgrade at Wells Fargo. Move that rating from market perform to outperform. One other notable upgrade this morning, we did have Eagle Rock, that is EROC, Eddie Romeo Oscar Charlie, upgraded also at Wells Fargo. And a couple downgrades that we did get this morning that are notable. B. Riley & Co. downgrading shares of Glue Mobile to a neutral. Glue shares, let's see, not really yet responding. There is a bit of volume in that name this morning, but nothing to the downside quite yet. I would watch for this one to maybe gap a little bit lower at the open. Also, Stifel Nicholas downgrading shares of Heartland Express, Hotel Tango Lima Delta to hold. I thought there might have been some news on Heartland. Let me check it out really quick. Looks like it's the Stifel Nicholas downgrade that's getting the stock this morning. We did have a couple of new coverages on a company named Houghton Mifflin Harcourt, Hotel Mike, Hotel Charlie. It was a recent IPO. Let me check my handy dandy pro feed to see when that stock started trading. Started trading on November 14th. Once again, the ticker is HMHC. We got new ratings at Morgan Stanley. They set an overweight rating. We got a new outperform rating at BMO, and we also got a new buy rating at Stifel Nicholas. It looks like Stifel's got a $21 target. BMO's at $22, and Morgan Stanley's at $20. So just right around $21 is the average there. Stock's currently trading around just under $18. Let's see what we got moving this morning. We got about 5 minutes before the open, folks. Everyone get their trades ready to go for that all-important open. Dennis was highlighting a little bit earlier that he thinks most of the trades go off during, I don't know, the first half hour of trading. After that, it's sort of, kind of chill on the market. A couple of the movers, though. Let's see. We did have some news on InterDigital this morning. Stock got halted. Ticker here is IDCC, India Delta Charlie Charlie. Was halted for news at around just before 8 a.m. There was a Form 8K that was released from InterDigital saying they have reached a settlement pact with Huawei. This is a Chinese operator, and InterDigital shares resumed at about 8:30. Stocks up almost 11% at last check. We got about 50,000 shares traded so far. A little bit of volume coming into that name. Who else we got moving this morning? We got shares of Tesla up about 5% this morning. I'm sure we're going to dive into this one a little bit more after the open. Kyle, stocks up.
Why not, right?
Why not? What's a show without a little look at Tesla? So we are over 150 this morning.
We know why she moved?
I mean, this is just such a Momo name that it'll kind of go whichever way it wants. I was highlighting a little bit earlier to Dennis. There was some news out of the NHTSA late yesterday. I believe it was like 1 or 2 p.m. Eastern Time. They said they were going to keep their 5-star rating on Tesla's Model S amid those U.S. safety concerns and the subsequent review. So I don't know that I don't believe that the stock's moving on that today, because it did sell off a little bit into the close following that news. So I don't really think that's doing it, but I think it's just kind of what traders are sort of digesting, sort of dealing with ahead of the open this morning. Who else we got? We got shares of Supernus Pharmaceuticals. Ticker is Sandy Uniform Papa November. To all the pharma traders out there, if you had this one, congrats this morning. Stock's up 18%.
Woo-wee.
We are over $8, folks. Supernus, they announced FDA approval of it was United Therapeutics Orintram. We highlighted that news item yesterday, and then late last night, Supernus issuing their own release confirming that deal. Traders sort of reacting to that this morning. Watching shares of Candy Technologies Kilo November Delta India. Stock is up. What do we got? More than 6.5% on over 100,000 shares traded already this morning. Candy signing an ownership transfer deal with Geely Unit, and we are up over $8 this morning. Check out shares of Cal Amp, Charlie Alpha Mike Papa. Camp is the ticker there. They had results last night, I believe it was. Stock is down 7% this morning. We're under $26.
What was that ticker?
CAMP, Charlie Alpha Mike Papa. So we did get a downgrade this morning. Found those results. I believe the quarterly figures were about in line, but I think the guidance is what got them. So we got Q3 EPS 23 cents on sales of 63.5. Analysts were looking for 21 cents on sales, just over 61 million. So a beat on the third quarter, but here comes the guidance. Q4 EPS in the range of 19 to 23 cents. Analysts are at 24. Sales expected in the range of 60 to 63 million. Analysts are over 63 million, just over 63 million there. So Cal Amp traders, bulls kind of taking a little profit there. Stock's down 7% on some okay volume this morning. Did highlight that that downgrade on Glue Mobile from B. Riley. Traders are selling the stock following that downgrade this morning. Stock's down about 3% at last check, under $4. That's about all I got.
You
for the
see
movers.
anything right at the open with the home builders? Because I'm reading a bunch of reports. U.S. mortgage applications fall, refinance hits 5-year low, and I thought I read somewhere that it was applications for this is Reuters. Applications for U.S. home mortgages fell for a second week and hit a 13-year low as mortgage rates
13 years,
rose due to a bond market sell-off following the Federal Reserve's decision to power its bond purchasing stimulus in January, an industry group said on Tuesday. So they're saying that U.S. home mortgages fell for a second week and hit a 13-year low. What are the? I just heard the bell.
The bell
Ding,
is
ding, ding, ding,
yeah.
ding,
There,
ding.
there's the bell. There's the official bell. So we've been open. I don't know, about 20 seconds or so. Traders off to the races. Here we go. Just to get back to you, Kyle, we did have NBA mortgage applications for the week ended December 20th. That was out at 7 a.m. This is a weekly number, so you do get this each week at 7 a.m. I believe it's always Tuesday, and yeah, we were down 6.3%.
Wow.
Yeah, and then we did get the house price index at 9 a.m., and that one was right in line, up 0.5% for the month of October. Heads up at 10 a.m. We're going to get new home sales for November. And then also, after we come back from the Christmas break there, we're going to get pending home sales for November. Economists looking for about a 1% gain month over month right now. So I would expect the home building inspector to sort of be one of the most volatile, one of the sectors that's getting a lot of coverage this morning, just because we do have a couple data points that we're dealing with this morning, and we do have a couple that are coming later today and later this week. Watch that XHB. Kyle, you ever look at the XHB?
XHB.
Yep, that is the Spider Home Builder ETF.
Ooh, that's a good one.
Yeah, so it's a big old basket of all these home builders, the Toll Brothers, the DR Hortons, the KB Homes of the world, all in one nice little place for you. 32.90 last trade in the XHB, and to be honest, I'm not totally familiar with technicals and how they apply to ETFs. I'm assuming that
Same thing, yeah.
Same thing, but
Looks like that 32 level is an important level.
32, oh definitely, and then a little bit more near term. Looking at the chart from yesterday, I see a good bit of consolidation over, I don't know, an hour and a half at the close. Near the close yesterday, it was trading, sort of vacillating, flirting with that 32.80 level. So if we want to hold over 32.80, I'm going to be liking this as a bull. We're at 32.90 right here.
And folks, if you got questions, type them right in the chat. We got another 15 minutes here before we're gonna get off. So if you got some stocks you want us to look at, or any news you want us to talk about, or I think the only thing you can't do is ask us why Tesla's up, because the answer is Momo.
Mo, which is, I don't know, that's a good enough answer for me.
Yeah, it works. Volume and price, that's all that matters.
That's all that matters. I think, let's see, do we have some questions in the chat? I felt like we had a little something.
I really
was
like that
looking at this morning.
XHB, watching that today. And you said we got 10 a.m. is new pro or November sales?
New home sales, yeah. So there's a couple different home sales indicators. There's new home sales, there is pending home sales, there is existing home sales, and then there's also another one, housing starts, and that is actually when like construction on a house begins.
Let's talk about retailers real quick.
Okay.
I'm watching the Twitter feed here and talking to retail analyst Brian Sazzi from Bell's Capital.
What up, Sazzi?
The Saz. And I've read a bunch of articles this morning. Retailers are having a quote-unquote crappy month. And I think the headline before Dennis got off we were talking about was on the Market Watch article, how Amazon and eBay stole Christmas, the Grinches. And I'm looking at WMT, BBY, Target, TGT, Kohl's, KSS, Foot Locker, FL. You get the mall stalwarts, American Eagle, AEO, Victoria's Secret, LB, Macy's, M, and they are just getting. Can you look at some of the stocks here with me? Look at WMT.
Okay.
She's down a little bit on the morning, but I think if you look in December, they're all down. I think on average is 7.5% since Black Friday, Brent.
So that would be, I mean, in my mind, that makes me think of sort of the buy the rumor, sell the news kind of thesis of trading.
What's the ETF? Do we have an ETF for retailers?
Absolutely. I'm looking at it right now. It is XRT.
XRT.
They get clever with these tickers. You see, they get the R in there, I guess. I don't know. They get the HB home builders.
The RT.
I don't know. Whatever. But
I'm pulling her up right now.
So we're up. I don't know, about 0.1% right now on the XRT. But where you're gonna get some value out of this chart is pulling it back as Kyle was saying, pulling it back over this holiday shopping season. Actually, look at like a 2-month chart there. I'm looking at a low around actually under 84 bucks in early November, and then look at that huge run up into the Black Friday week there. Ran up to over 88 bucks, so up about 4 bucks as traders were sort of prepping ahead.
Pulled back right in December down to 85, 50.
Yeah, and now we're sort of kind of making some of that back, but I mean, it looks like the channel is sort of tightening here. We're sort of narrowing. We had a wider range going into the beginning of November and into the end of November, and now we're sort of getting a little higher lows and lower highs. So it kind of looks like it wants to
Come back up.
continue consolidating, maybe break one way or the other. We did have a few retail data points out a little bit earlier. I'm trying to go back and find the one. I think that the ICSC Goldman Index was out a little bit earlier. That's the one I got to find. But I do have some data from Redbook that was out a little bit earlier. They're one of, let's say, 3 retail research firms. There's Redbook, there's this ICSC Goldman Index, and there's also one called Retail Metrics. And Redbook saying that same-store sales during the first 3 weeks of December were down 1% from November, and then up 3.1% year over year. And this is about in line. This is pretty much what I've been seeing in this index for the last, I don't know, let's say like couple, maybe month, maybe month and a half. It's been showing declines month over month, but increases year over year. So I mean, it's strong compared to last year, but the thing that you want to think about here is the expectation, and that's what I think Sazi is kind of highlighting. It's just that I don't know, expectations might have been sort of overblown for this holiday season.
He said it might have been already priced in too, and he said it will become increasingly integrated under the seamless inventory movement now underway. He's going around all the stores right now taking pictures of the traffic, and if you go on his Twitter stream at Brian Sazi, you'll see he has a picture of Walmart in the Lego aisle, and there's 0 Legos left.
Talk about, oh really, that's funny. Talk about the one of the hardest working analysts on the street.
There's
Literally,
not much harder.
it's a blast following Sazi's Twitter because you get these things, you get these gems. So Sazi is sneaking into the stock room of JCPenney to look to see what their inventory is like. Pretty funny. He's following around a JCPenney manager, seeing where this manager is spending his time. I mean, it's getting down right to, you know, I mean, some pundits would call it anecdotal because he's only looking at a few stores, but I mean, I don't know. I think he's really kind of getting down to the nitty-gritty. I like his style.
He is he's one of the best analysts that I found in the industry in over my tenure here at Benzinga for sure.
So let's look at Twitter, Kyle. Believe it or not,
What's she doing?
We're moving higher.
No way.
Believe it.
67.15. Yeah.
What's that up on the session? We're up 4%, another 4%. Wow. So I was actually watching some CMC later last night. There was Bob Peck on Fast Money. He is the SunTrust analyst who's done a great job with this Twitter coverage. He was sort of talking about a little overvalued right here. I think he has, actually, let me go check this.
Look at that volume,
I don't
Brent.
wanna, whoa, so we're at almost 4 million
Wow.
over 10 minutes of trading.
Wow.
And there wasn't a ton of pre-market action on shares of Twitter, so a majority of this volume is
came right
coming
now.
after. Yep. And we're getting this volume as the stock is moving higher, and we're over 67 bucks. 67.20. I mean, it just keeps going higher. 67.30 right now. So Bob Peck, he does have a neutral rating on it. Recently downgraded it from buy to neutral on December 16th. That's kind of what he was highlighting yesterday when he was on CNBC. Just sort of not saying a ton about fundamentals of the company, just saying that it's a huge valuation right here. He had a $50 price target when he initiated coverage right at actually before they IPO'd. So I mean, it hit his target. I mean, he's either gonna raise this price target or downgrade it. In this case, he did the latter. I don't know. I think that sort of the street is gonna start to. I don't know, get a little
I mean,
pessimistic.
if
on
I
Twitter.
remember correctly, this thing priced at around 26, opened at
Yep.
45.
Right?
It kind of stayed in the 40 to 45 range up until 2 weeks ago. And this thing has ripped straight up.
Yeah, and Dennis was kind of highlighting, the trend is your friend. Don't fight the momentum. But I mean, if you got in around $40, it's prudent to be taking a little bit of profits and
I mean, you're up $27.
right. I don't
Wow.
know.
Was
This one's
Facebook following this morning?
Facebook. Yeah, let's take a look at Facebook. Actually.
It is. Yep, she's going higher too.
So we got Facebook shares up about 1%. We are almost flirting with the 58.50 level. I see a high yesterday around 58.30. So we did move over that high this morning. That's a good sign. If you're long Facebook, stock was up from.
Can it hold though?
Can it hold? I mean, there's no reference points here, obviously.
Just
So
yesterday's high.
I can't. Yeah, exactly. I can't take the chart back and say, oh yeah, you got a little resistance at $60. Who knows what's going to happen at $60? I mean, with those even numbers, $50, $60, $70, that kind of thing. I mean, traders like to use those round numbers. I know Joel would highlight that. So I mean, you are going to see a little bit of resistance at $60 naturally, but I mean, it's not based on anything that's happened in the stock before.
Nope. This
The
is
real
brand new territory.
exactly the real reference point that you got here is $55, and folks were at 58.36. So I guess the saying is, how does it go? Resistance turns into support. Support turns into resistance.
You can hold it.
Did I say that right?
Yep. If you can hold it. Yeah, there's, Dennis was talking about on the show this morning that there's just, we talked about it yesterday morning. He was actually talking about looking at taking these trades, but now he said there's 5 points of air underneath you, right? With absolutely no reference at the top here. So, I'm watching this thing battle right around 58.40, but we have no reference. We have yesterday's high, which is, not a very strong level. So with 5 points underneath you, there's too much risk in these stocks right now. But they if the S&P continues to, what's the S&P doing right now? Continuing to make new highs?
We started rallying. We did hit 1824. I'm looking at the futures. 1824.75 was our high just after the open. We did come back a little bit after that. We are below 1824 here, and just before the open, it looks like there was just a bit of resistance at 1824. I see a couple touches at 1824 and then retreating. But looks like we do want to hold over the 1823, at least over the near term.
You got any questions there in the chat before we sign off here, Brett?
Actually, there was something that I did want to look at. It was ticker NED, November Echo Delta. This one, it's a small company, but it did have a deal to go private this morning. Stock is up 13%. I mean, mind you, this is a $100 million company, but then again, we are on a holiday trading day. So traders out there, I'm sure they're looking to get their little hands on whatever the heck they can trade. Stock's over 250. The deal was at 280 per share to go private. So looks like we got about 30 cents of a little space there. Not sure if the market is kind of pricing a little bit of uncertainty. But it looks like we got about 30 cents that traders could be working with here as far as some kind of arbitrage play goes.
Interesting. Who bought them? Was it the management or investors or personal investors? Is that telling you?
It looks like existing shareholders, couple of existing shareholders, which is pretty customary to see in these go private deals.
Interesting.
I wish I had
I'll be watching that XRT at 10 o'clock today.
Nice. So usually at about this time, I usually like to give a little preview of some earnings coming up next week, some kind of economic data points, but there's just not a ton. Earnings-wise, I don't have much. Jobless claims will be on Thursday when we get back from the holiday. Also going to get pending home sales. Actually, I think I said that wrong earlier. I think I said pending home sales were Friday. It looks like they're actually going to be Monday morning. That's really about it for the rest of the year.
Well, Merry Christmas, Brent.
Merry Christmas, buddy.
I'll be adding to the retailer sales this afternoon.
Yes.
I'd be
Good luck.
I'd be
anyways.
long
Godspeed.
Probably. I don't know where I'm going yet.
You can't. I
TGT.
guess you can't Amazon it.
No, I can't Amazon
That'd
it.
be expensive shipping.
Not unless they got the drones flying on Christmas Eve. All right, everybody. Happy holidays. I hope you enjoy the day. Thanks for joining us. Signing off here for Benzinga's pre-market show, sponsored by the one and only OptionsHouse. You can get 150 free trades, which
So many trades,
you
really.
can spend that money on your significant others
Wow.
and help retail sales
Good
and
one.
trade them long in turn. Only through benzinga.com. Thanks for joining us. Enjoy the short trading day. Markets close at 1 p.m. Eastern today. We'll be joining back. Joel O'Connon's back in town there on Thursday. So we're going to be doing a poll to see if you want to kick him off the island, and I'll become a full-timer here. So, no, just kidding. We all love Joel. So everyone enjoy family, friends, and loved ones. We'll see you back on Thursday.